Today, I'm talking to Chris Hunter and Anna Chiara Makandali about how these touchstones are still in the core of their work today as they manage sustainable and impact investing portfolios for some of the world's most progressive institutions. So welcome, Anna Chiara and Chris. First of all, give us a little bit more background about Cambridge Associates. What are your key activities? What is your purpose? And also, who's your client target group?
Well, thank you for having us today, Tina. So Cambridge Associates is a global investment firm, and we work with endowments and foundations, pension funds, private wealth owners, and then family offices to build and manage customized investment portfolios. So these portfolios are unique to each individual client, and it allows them to really tailor their goals and objectives, including their sustainability goals, to reach their broader investment goals. We do this through a number of investment and impact strategies. So being responsible stewards of capital is at the heart of everything that we do, both from a risk management perspective and a long-term return potential. And we believe that we're pioneers in the sustainable investing space, and that's always driven us to be at the cutting edge of ESG integration. So in order to achieve this, we employ a number of impact strategies across the spectrum, but we do all of this in a pursuit of outperformance for our clients.
Okay, and you've been in that area for nearly 20 years now. How have you seen this world evolve in that time?
Well, it's changed a lot, first point. And it's changed a lot from people wanting to exclude things from their portfolio, so negative screening, to actually wanting to integrate society and governance considerations into their portfolio, to actually pushing for real world change, as Chris was just mentioning. So there's been a big change. And so now we see our clients wanting to finance real world solutions. For example, if we think about climate change, investing in battery technology, investing in the grid, investing in all that we need to change so that actually we can get the results that we need for our planet. The other thing that's changed, which I think is super interesting, is who is asking the question. 20 years ago, institutional investors, it was boards asking the question, saying, I want my portfolio to be aligned with my values, with who I am. Now, instead, and this is the really fascinating point, it's investment committees. So people who are investing money, who see around them a lot of growing opportunities, and they have FOMO. They have fear of missing out. They want to make sure that they can actually invest in this trend because it's a very big opportunity. And so they want to make sure that they can invest in sustainable real assets. They can actually invest in the transformation of the industrial economy that it needs to happen. And so they want to make sure that they get on these opportunities and don't miss out.
Chris, can you give me an example of what bespoke portfolios look like?
But when it comes to customized investment portfolios, we recognize that investors really want to express their vision and values through their particular portfolios, and having a customized portfolio allows them to do that. So for example, many of our clients are adhering to the Paris Agreement's 2050 goals for net zero, but there are others who are seeking to do it more aggressively, some by 2040, even some by 2030. And having a customized portfolio allows them to achieve that. Now, there's a place in the market for off-the-shelf products and funds, but at the same time, we're observing more investors that really want to understand and tailor what they own to meet their own specific goals and objectives, either in a particular area or of a particular magnitude, and then importantly, to be able to measure that impact that they're making.
What does your organization see as the primary emerging social and environmental issues, and how can investment managers or asset managers provide positive solutions to these issues?
Well, climate change is clearly at top of everybody's mind when it comes to the real sustainability challenges in the world. When we look at the discussion from COP26 around policies and processes to address climate change, we saw the baton being passed from nations to private companies. Now we're here at the World Economic Forum annual meeting, and we're very interested to see how private companies pick up that particular challenge. At Cambridge Associates, we're actually embedding it in what we do internally as well as with our clients. So last year in 2021, we took a net zero pledge in solidarity with our clients. And this is another thing that we're observing, is that investors are not only expecting to embed sustainability within their own portfolios, they're also expecting their partners and advisors to do the same, so that we're all working together to make these societal changes.
I couldn't agree more with Chris on climate change being so crucial. The other point, of course, is inequality, social inequality. And we need to think about the fact that for the transition, for climate change, for us to actually really be able to tackle this, we need to be taking into account the fact that large parts of societies are going to be affected disproportionately. This is true of emerging markets, it's true of actually lower income communities, so it needs to be a just transition. We can't just be thinking about a transition. And these two things need to be thought of together. And let me give you an example to explain what I mean. Our clients have been investing, for example, in the transformation of gas and coal plants into renewable energy. And they've been able to do that while maintaining and preserving the jobs at those plants. And also because you're transforming a plant rather than building it from scratch. Actually, it's been happening faster than it would have happened had you started from building the plant from scratch. But you can see there's potentially conflicting objectives, and the important point is to try to find a way to make these things happen together.
So Chiara, let's go back to climate change and the net zero target. How can investors go about implementing net zero into their portfolios?
Net zero is a really challenging target, and we need to remember that we either all succeed or nobody succeeds. There's 4 key points in building net zero portfolios that we think are crucial. The first one, drive real-world change. The second one, don't let perfect be the enemy of the good. The third one, investing in fossil fuels is problematic. And the fourth one is, don't shy away from hard questions in hard areas. Let me explain what I mean by all these. The first one, drive real-world change. Yes, measure the carbon in your portfolio, but the key is have less carbon emissions. And you can do that by engaging with companies and investing in climate solutions. The second point is don't let perfect be the enemy of the good. And what that means is don't get distracted by excessive discussions around data and methodology. Drive down those carbon emissions. The third point, we need to realize that investing in fossil fuels is problematic. If you invest in fossil fuels, you can do that only if they have a clear transition plan. And lastly, don't shy away from the hard questions. You can't just sell the very high-emitting sectors to somebody else and hope that the problem goes away. There are enormous parts of the economy that need investments to transform. That's cement, that's steel, that's transportation. And so really, each investor needs to build on their competitive strengths. You could either be focusing on climate solutions and make a big difference, or on engagement and make a big difference, or on them together. Build on your competitive strengths and let's do this together.
Okay. Chris, do you have anything to add?
Well, we've certainly seen many investors, the leading investors, the pioneers in sustainability, doing this for over 2 decades now. But it's really been in the last 3 to 4 years that we've seen the broader investment community pivot to a more sustainable outlook on investing. This really needs to accelerate if we're going to reach the Paris Agreement goals for 2050. And while we see many investors moving in this direction, we also see that others are more reticent. It's our view that the investments in an economy transitioning to net zero are going to be the winners of tomorrow. But if we are still talking about investment in sustainability by the end of the decade as an option for portfolios instead of something that's naturally embedded within them, I think we're going to run a risk of not meeting our goals, and that's not an outcome that any of us want to see.
So what would you suggest in order to accelerate the speed of implementing net zero? Does legislation have to be changed, or?
Well, it has to be owned by all of us, and legislation is one avenue to reaching net zero. But in fact, I think that when we've seen these trends in investment happen before, if you can illustrate to investors that it is the path not only to creating a better world around your sustainability goals, but that you're able to generate investment returns from that, then that's where investors will gravitate. And as I said before, we see these investments as the winners of tomorrow. And if that's the case, then investors will naturally gravitate to that, and then you'll have the solution to the problem.
Okay, so to sum it up, investors need to understand that you can have both impact and investment returns.
That's correct.
All right. Thank you so much for being here.
Thank you.